And you've arrived at just the right time, along with Nona Peltier, to talk about business. Nona, another survey. This one suggests that investors continue to shun high-yielding shares and managed funds. What's going on?
Yeah, well, another survey has shown the same thing. New Zealanders love their houses, their own houses, not even their rental houses. And they're hoping that those houses are their best investment and will return them a great capital gain. And that's what they're sticking with, forgetting all about the market, KiwiSaver, and other kinds of managed funds, which have been returning quite high yields over the last few years. And so this latest survey by ASB is really not that different from ones we've seen in the past, where Kiwis just say, hey, we just rather own our own house, that's our investment, and forget the rest. Why, you might ask? Well, there was this crash in the 80s where a lot of New Zealanders lost a lot of money in the market, and they've never come back. So while, in the last year, our NZX Top 50 index gained 30% in value, a lot of New Zealanders simply have missed out on that.
The thing being, though, if you consider your house the investment and it's the roof over your head, you can't cash it out.
Well, you can always put it in a term deposit because it's as safe as houses, but also returns very little.
Yeah.
So you're basically putting your money under your mattress, literally, and one day in the hope of getting a capital gain. But you're still going to have to live somewhere. So the idea is you should really think about other kinds of investments. People who are a little bit worried should probably get some financial advice and look at maybe a more balanced approach to their investments.
Let's talk about Huawei New Zealand, okay, because this has come up in the news today because of obviously the UK. Is Huawei New Zealand more hopeful that its equipment will eventually get rubber stamped for use in the 5G network?
Yeah, definitely more hopeful. So we spoke to all the telecommunications companies today. None of them wanted to comment any further than the sort of statements they've made in the past, which is basically we're doing nothing, going with what we have and just sitting on our hands, which is fine. It opens an opportunity for Huawei. So up until recently, they had no show whatsoever of even getting a meeting with the government officials. Like, they haven't met to discuss their issues at all. So in their sense, they're saying, well, look, any security issue can be addressed. All networks have security issues. We can address whatever the government's issues are, if only they will just tell us what they are. So if we meet with them, that'd be great. That's the first step. They're hoping to get a meeting within the next few weeks. And if that works, then hopefully they'll be able to, persuade them that, like they persuaded the UK government, that they can be made secure and that security issues can be addressed. In any case, these pieces of equipment which Huawei use in their 5G networks internationally, it's only really the Five Eyes countries that have resisted. They're growing, Huawei is growing at a rate of, 24% in 5G. That's what they said today. Internationally.
Big numbers. Okay, speaking of numbers, what's been going on the market today?
Very little. So there you go. We started out pretty hot, looking like, because we took a lead from the US, which had moved up. But no, we lost all those gains once Asia digested the new fatality and illness numbers associated with the coronavirus. So we ended up a little changed, just ending down 9 points to 11,677. The dollar also little changed, just sitting there waiting. Now, this time it's mostly because of what the U.S. Federal Reserve might or might not do. They're having a meeting later today in the United States, and they're expecting no change in interest rates, so we'll see what happens. Meantime, we're at 65.3 U.S. cents, 96.4 Australian, and 50.2 British pence.
Thanks, Nona. Nona Peltier with all the numbers and business news.